chat some more, but unfortunately we've run out of time. You have a good day. We'll touch base with you very soon once again. That's Indiabulls Housing Finance. Sequentially, they've done a better quarter. The stock too in the last 3 months has seen an 80% gain. In fact, this entire space has been buzzing quite a bit. But let's move on now. The pre-opening rates are settling a tad bit higher. 11,400 seems like it could be here this morning. And a lot of stocks, actually banks, Z Entertainment, some auto stocks doing pretty well. But let's focus on the markets as a whole. Samir Arora, founder and fund manager at Helios Capital, joins in to discuss how he's feeling about the market and how he's feeling generally as well. Samir, hi, good morning. Hope you're well. How are you feeling about the markets now?
Well, I'm always happy, sometimes happy because I'm bullish, and sometimes I'm happy because I'm bullish about my bearishness. So generally, I'm a happy guy, and it's all good.
Okay. What is this backdrop? Are you sitting in your kitchen, or is your, I mean, you have some very interesting pieces in your showcase.
So, you know, we don't have these in a kitchen, unfortunately.
No, I mean, something looked like a kettle to me. I'm sorry. I mean.
Okay. Samir, Samir, good morning. Okay, good morning, Samir. Let's now talk serious stuff. What's the current long shot for you? It's been a phenomenal market, right? Just staying in and riding the trend has made a lot of money. But your view?
Well, made of money means from the bottom. Otherwise, now year to date in rupee terms, we are up a few percent. But so you can't say we made a lot of money, but we haven't lost any money is a big highlight of life. So the thing is that how to reconcile what is happening in the economy with the market. We finally agree with this new letter of how to define the economy different from V and U and L, that this is a K-type economy, where one line is going up, which is related to some sectors, and one line is in decline, and these things will increase over time, because whatever was the underlying trend before COVID, in many cases, these trends have been accentuated, and therefore the disparity might become even more. And because of that, after a very long time, forget about the net exposure, which you asked, but first let me tell you my gross exposure. So we are 120 long and around 45 or 50 short to be 70 net. So it's not a normal 70 net that we have or 60 net in the past, which is like a 90 long, 30 short. We are just betting more on both the sides. And so we are 120 long and around 47 odd short or something like that. So it'll be around 70 net or 72 net.
You know, this is, I think we're going to repeat this answer of yours over and over again. It's the most interesting description of the economy as the letter K. Makes a lot of sense, though. It's making sense of the economy and the markets at this point in time. But Samir, what would you be long on, and what would be the lower end of the K?
So first is on the long, there are two things which are actually doing okay. And one is, which is because it's fallen a lot. So if our old three sectors, remember, are financials, consumer, and this IT, pharma, chemical, which is the exporter type. And so in the financial sector, where we haven't reduced it much, the primary reason is that the stocks are anyway down 30% plus. And in some of them are down 40%. And this normally, unless you think this is the end of the world, then this is a fair and a big fall. Particularly if you look at some other sectors which are directly hit. See, you can say that the banks and financials are hit in a portfolio sense. Some parts are hit more, some are hit less. But you look at the airlines, you look at multiplex, or you look at some other sectors which are directly 100% hit, or even hotel, which we own otherwise. But these stocks are down less than the financials are down. So I find that completely ridiculous in some sense. So we will remain in that financials to a serious extent. We have added a little bit. And then the other one is this, other than the IT pharma, which clearly is in some sense protected up to a point, is to increase the weight in these new sectors, which could be anything related to more people coming online, or giving services to MSME online, or linked to PLI, or wherever the trend is your friend kind of a thing, both from a fundamental point of view. And the market is already reflecting, but I think these things will get exaggerated over time. And on the negative side, our biggest bet would be auto sector, where if you, let me give you a thought experiment. So let's say that every month some 100,000 units are sold, and for 4 or 5 months the market is closed or whatever, and therefore nobody has turned up to buy, then in month 5, because auto sale would have meant at least 2 months of in-mind planning, if not actually planning by going to the store or looking at financing options or whatever. That means these guys who thought about buying car in Jan and Feb, and they thought they'll buy it in March and April, haven't turned up. Because if for 5 months these guys had a 500,000 to buy, and they have not even turned up to the extent of 15% or 20%, because today it's not 100 units in the 6th month. And there was supposed to be new 100,000 people coming into the market to buy this month. How does it, I mean, it just looks wild to even think that, is it pent-up demand or not? It is clear that there is no demand, because otherwise you should have at least 50, 60, 70% of those guys who originally were planning to buy in April, May, June, July, not come. And if they are not coming, and suddenly new 100,000 guys come, and we say that the only loss is the 5 months of loss, then what does it say about that crowd? What was so distinct about the crowd which was supposed to come in those months? So it is nearly pakka that this is a pent-up demand, also very poor pent-up demand according to me. Very poor pent-up.
In fact, even Bajaj Auto, Maruti, all the top guys at these companies had told us that don't believe this demand much. After the festive season is when the real problems are going to start in the auto space, the demand crunch, etc. But I wanted your thoughts on this China +1 de-risking strategy that everyone is focusing on, the supply chain restructuring. Which are the themes, which are the sectors that you would play because of this theme, this strategy?
So, there are very few. So it's only the electronic manufacturer, and there's only one listed company. And fortunately, it's a big position. And the other one is an AC company, which we had, but somehow we don't have, because we got carried away by the fact that the summer season is gone, and now, it'll be next summer and all that, even though that stock has also done well. And then in chemical, we already had. Pharma, it is not clear, but more as a defensive thing, as I told you last time, we had bought 3 pharma companies, and now because they've gone up, their weight in our portfolio might be 8% or something, which is okay for me. But there is some confusion, because those stocks are up, if you look at it year to date, 70 to 75%. And so, 75, if you have it, it's great. We didn't have it for the 75% move. But overall, they are up 75%. So it looks a bit sort of psychologically difficult to now buy a stock of 75%. But the big picture thing is, first of all, every day you have to reconcile what you are doing and saying, we can't say every day.
But like I pointed out in the morning, for me, the stock to watch really is HDFC Bank, because that's the one which has started to give some kind of traction to the bank nifty bulls. And, even today it's up about 1.5%. And it's got some support from Kotak Mahindra Bank. So these are a couple of names doing well. In fact, Samir, I wanted your thoughts on, the way some of these stocks have behaved. HDFC Bank, for example, now trading at 2.5 times price to book. This, of course, has been your biggest wealth creator, right? So post the management change, have you had any thoughts about relooking at this, or you think this is just one of those compounders which will keep compounding?
So it's still a number 1 position. And the thing is that we have 2 kinds of stocks in our portfolio. One which we call high confidence in reasonable return. That is stocks that are not supposed to go up 40, 50% in a good year, and then fall 30% in a bad year. But stocks which you feel will do reasonably well in a good market and will not embarrass you and blow you out of the water in a bad market. So in that, the number 1 stock, which also happens to be the number 1 stock in the portfolio, is HDFC Bank and some other private sector banks, and then some like TCS type of names, which are more steady, regular names. And then you buy 2% in some other names and hope that some of them will do really well and at least compound for 3, 4, 5 years. Very few stocks will compound for 10 years. Those are rare and not to be believed on day one. But if it happens as you are holding them, you continue to hold them. So yeah, no change in HDFC Bank view in terms of selling anything or actually even buying anything, because we never sold anything.
But Samir, if I take your previous very detailed explanation of the way you're disappointed with auto numbers and sales, most of these banks, HDFC Bank, I think you have Kotak Bank also in your portfolio, yes. You have Bajaj Finance. These guys are lending. They are lending to consumer. I mean, they're more retail than they are lending to corporate, right? And if you're not seeing that demand, there could be a problem of people not paying back the money as well as not enough demand. How do you reconcile the two?
No, I am reconciling that because I don't have many of the other smaller finance companies, and even within these names, some of them we may have reduced the weight a little bit. So the thing is that overall, because you have to create space to buy other things, anyway you have to trim some. Okay. And some fall because the prices have fallen. Yeah. But I was saying only on a relative basis, not compared to auto, because they are still down 5-10%, let's say. But stocks which are down, but where clearly there are in either a stage of semi-permanent damage, any travel tourism or a multiplex and all that. But they are down less than a good private sector bank, well-funded, well-run, strong history, and it is down in the same range. But the bank, everything is not affected, number one. And second, but in the banks we agree, and which is including NVFCs, that their definition of moratorium is a big deal. And we have got nervous on two big names that we had because of the way they have posted results or the way they are showing their moratorium books.
Okay, all right. That's on the NVFCs. By the way, the market's holding up quite well. The Bank Nifty almost 270 points higher now. So many pharma stocks are hitting fresh highs, and Jubilant Foodworks is also at a fresh high. So that one's been a running theme for the last many days. Samir, I remember during our Instagram chat, we had spoken about telecom and how you were quite optimistic at some of these global plays that we call them now, the likes of Reliance. But since then, Reliance has come off a little bit from its highs. What do you do now with telecom? It's taken a pause, but are you still optimistic here, or do you think this theme is played out?
So first of all, we don't call Reliance as telecom. That would be very depressing. You have to call it technology. Yeah. You can call Bharti as telecom. So the whole game of Reliance is that now that it is positioning itself as a technology company, what all it can do. And I think what it can do is that over these 500 or whatever number of million of users it will have, or then how much to charge for giving them cloud service to save their photos, or giving them music download, or giving them some other entertainment and other things. And that is one bet. The other bet is on the retail. And by the way, so for two reasons, we are actually out of our three groups, which is financials, consumer, and this IT pharma chemical type, actually most negative on the consumer. One is because the consumer sector stocks were always very expensive, and they were more of a hiding place for the last many years in some sense, because it's not that they were growing massively. It is a story which somebody comes on your channel and says that, oh, these companies have been growing at 25% their earnings. None of them have grown. They were growing at 10-12%. But the thing is that today, if Walmart or Flipkart or Reliance Mart or D-Mart, all these guys become big, then their bargaining power relative to the consumer companies would be much bigger than what the Kirana guy is doing. And just before I came, you're talking about this Credit Suisse report, which has come out today on how e-pharmacies, online pharmacies can bargain better with the drug companies, and saying that if you don't give me a discount, I will present to the customer an alternative drug, and I can show each component of that drug and say, see, it is similar. So if you want to buy, you can buy whatever. So this bargaining power, which in the US is very high with the organized retailers. In India, what can be Reliance JioMart model? It can only be this, that I will consolidate the bargaining of the 1 million Kirana guys, and I will go and buy from levers and not each of them individually. So that's why, even though we own many of these stocks currently, but over time, if this market broadens and if these things happen, then I think the consumer sector is...
Okay, Samir, a word on the market itself, in the sense that, a lot of this rally has been about carry trade, right? I mean, we can look at our markets move from the March lows, but we have performed in line with what the rest of the emerging market peers have done. Your thoughts on, whether this party is going to last for a bit longer?
The first thing is that if you look at 1 month, 3 months, 6 months, 1 year, India has underperformed relative to emerging markets, Asia, Japan, every period. It did well last month, but even last month it underperformed actually emerging markets. But in general, it is still at least keeping steps to step and not totally behind over the last few months. So I think in one sense you can say that it's a dollar carry trade now, because the rates are low and you can see it in gold prices and DXY and all that. But that from a big basis is difficult for me to say how long that alone continues. But as I said, the way to live peacefully is to find some mental model and live with it. And now I am totally comfortable with my discovery of this K, saying that the good will be better. And then between that, you do a little bit of fine tuning to see if a stock is too expensive or less expensive. But the ones which are sort of on a downtrend, we bought Indian Hotels, I said last time. But some of them we have bought because they really looked at that time incredible value, and the stock actually is up 35% that time. But still, I don't want to overbet on those and saying they're cheap. And then you can say there is a line in the flat in the middle for some sectors, which could be auto, because auto won't be a permanent decline.
Yeah.
But currently, I think it is not. So it's not something which is getting totally disrupted or anything or something like that, which may happen in many other sectors. But it is not. It is a good sign of the recovery if it happens, of the economy in general and broader economy related to jobs. I also saw, Latha, your interview with the CMI guy who was talking about job losses in salaried jobs.
Yeah.
And what he was saying, you were only interviewing. So like out of 18
million jobs, yes.
Some 18 million, 20% of jobs are gone. And then others may have had salary cuts. And to say that we'll buy auto because suddenly we are feeling unsafe about traveling in an Uber basically means as if you could always buy it, but just out of sheer comfort or something, you are not bought it. I don't think there's a large audience of that kind in our India.
Actually, that is what worrying me about people who finance the autos as well.
No,
because if 20% jobs loss,
Correct. So we have also reduced it in the sense, as I said, because we've not bought new and their weightages have gone down because of market cap or price falling, and also because some of the surrounding stocks we have sold. So if we had 5 private banks.
Got that. Samir, I'm grappling with another question. I don't know if there is a macro question here or is it stock specific. India Inc. has cleaned up a lot. See, Eveready has gone to the Burmans. Crompton has gone to the Murgappas, and it may still be an open game over there. Mahindra and M&M is cleaning up some of the, we've seen a general cleanup, and that perhaps some analysts are presenting it as a very good price to book wise, India still looks good. How should we look at this argument? Is this a macro argument that India Inc. is now light on debt? And so are many of the banks, their big belching of, their big catharsis is over, even if some may come now. So does that give us more headroom to rise in terms of stock price?
If we look at it over the last few years, we were betting, all of us were betting on the fact that people have moved from unorganized to organized, let's say. And therefore these companies will do well. But soon we discovered that the unorganized, which was such a big part of the economy, did very badly and basically brought down the whole economy. It was not enough to say that, obviously the large companies outperformed the smaller companies, but the overall growth and the vibrancy of the economy disappeared. So when everybody's cutting jobs, when everybody's cutting expenses, again, you have to look at what were those people doing with those when they had the job and when the expenses were not being cut. They were consumers. They were buying cars. So it'll hurt many. It's like when you are in a stadium and you want to stand up to see the match from your seat. So when you stand up, you have a better view. But if everybody stands up, then it doesn't help anybody. So when everybody in India is cutting and everybody wants to be lean, what happens to all the things which you have cut? If you cut hotel expenses, and you cut airline expenses, you cut salaries, you cut jobs. So it is good at a micro level, but that is not the way to save the economy in aggregate.
Okay, I had just one more question, Samir. Since we're on the subject of big themes to watch or to avoid, one theme that has played out very well is this whole digital infrastructure, fiber to home, e-commerce, and a lot of these stocks, whether it's a Sterlite Tech or an India Mart, or a lot of these plays have done really well. Is there anything in this space that you like?
So that is how I indirectly said there's people who are helping MSMEs go online, or which shows which one. So but the problem is there are very few of these names. Like totally, now these are the 2 names. That's it. And we don't have Sterlite. So there's only one name for us left. So there are very few names. So unfortunately, this can be a part of a portfolio, but it's not, something you make in the top 5 or 10 position. But yeah, this is the new trend, and this will accentuate over time. So this will go on, because if for no other reason, the listed guys will have nothing else to buy till some currently unlisted company goes public or something.
Okay. All right. Samir, it's always a pleasure speaking with you. Thank you very